you put yourself in a position where you can have liquidity of your money, you leverage that money to perform more than one function in your life. It's taking care of your savings account, i.e. emergency fund, and it's a self-completing plan. Hey, what's going on, cash flow hackers? It's Chris with Life 180, and for this video, we're gonna be talking about the 5 reasons you need life insurance. And this is not your classic life insurance conversation about needing the death benefit or the most of the main reasons that people are selling life insurance. It's actually, I want to talk to you about why you need whole life insurance for the living benefits and to make sure that your goals and objectives for your financial life are actualized. And so I guess without further ado, let's just get into it. All right, so reason number 1 is a properly designed whole life insurance is what I call a self-completing plan. I always kind of say that whole life insurance is the only financial tool in the world that will make sure what you want to happen will happen when you want it to happen, whether you're here to see it or not. And so when you look at it from that lens, think about it this way. That kind of actually what I'm going to do here is I'm going to roll that conversation about having it be a self-completing plan and how important that is into number 2, which is, let's face it, we all need an emergency fund, right? Let's just call it an emergency fund. Now, whether it's a rainy day fund or anything of that nature, we all need to be able to save money for a rainy day. And so when I talk about a self-completing plan, I'm a big believer that the way we save money and the way we put money aside is what really prepares us for our future. It's what allows us to show up in our life the way that we're able to show up. If you want to be a really good investor, you need to make sure that you have enough money in case of emergency, so that way if the market takes a downward swing, you're not in a position where you have to liquidate negatively performing assets in your investments. You need this pile of money for an emergency to make sure that you can behave like a good investor. Most of the poor investment decisions and most of the poor results that people get because of investments has little to do with the markets and more to do with investor behavior. There's been literally hundreds of studies on that over the years. And so that's something to take into consideration. Now, going back to the self-completing plan component, how are we gonna save this money, right? If we know we need an emergency fund, well, I'm gonna lump these two in together, like I said, because if you're gonna save money inside of any account, money that we need liquidity, use, and control of, money that we want access to in case of emergency, right? Like if we need that, the question is, how much do you need? Well, Dave Ramsey would say you need 6 months. I would say you need at least a year because the Department of Labor says the average that it takes to find a job is 1 month for every $10,000 of income you're seeking. And so if you're a $100,000 income earner, you're talking about needing 10 months of reserves just to find a new job. And I think this is what's been happening in the economy recently. We have to take that into consideration. And I never want to be prepared for average. I want to be over prepared for what could be coming down the pipeline, because if we're prepared during the hard times, that's when opportunity presents itself to us. And that's when the greatest opportunities exist, is when most other people are making poor decisions. If you're positioned to take advantage of those environments, that's when you're going to be able to thrive. Now, so self-completing plan. Let's think about it. What if, and what I want to do here, actually, here's what I'm going to do. I'm going to actually pull up a screenshot of a life insurance illustration. So you can see here, this is why I call it a self-completing plan, because let's say you wanted to start with $60,000 because you have money set aside already. Maybe you're repositioning that money and you want to save after that $10,000 per year because maybe you earn $100,000 and you want to get to $100,000 liquid as fast as possible. Now, here's the deal. You could save that in a savings account, but here's the problem with that, is that if you save that $60,000 right out of the gate, you have it in a savings account. If you're like me and you're married, you got a wife and 3 kids, or maybe you got a husband and 3 kids, or whatever your situation is, you having that $60,000 in that account is not going to help you get where you want to go. It's not going to help accomplish their dreams. It's not going to put them through college. It's not going to take care of your spouse when something tragic happens to you. Your family and the goals and objectives and the vision and probably the legacy that you want to leave is never going to be actualized in that environment. However, by taking that $60,000 and putting it inside of a whole life contract, when it's designed properly, you can have your cake and eat it too. I think this is the only situation in the financial space where you actually can have your cake and eat it too. So here we go. Take a look at this. $60,000 in premium, and I'm gonna go over here to year one. 60,000, and this for a 36-year-old here, okay? So $60,000 year one goes in, and look at this. So you're giving up, you have $54,425. So you're giving up about 55, just over 5,500 bucks in liquidity, okay? Doesn't mean that that money's gone. It just means that you're losing liquidity of that money, and that money, and by the way, for an emergency fund, this means if you're utilizing this 60K for an emergency fund, that means your emergency fund's a little smaller. However, look at the death benefit that comes along with it. You picked up $969,000 of life insurance. So when I call it a self-completing plan, what I'm saying is if you die with 60 grand in a savings account right here, and you die, all you have is 60 grand. That's all your wife and your kids have. That's all your spouse and your kids have. If you die when $54,000 is your emergency fund in a whole life policy, you're talking about $969,000 of liquidity that is gonna get poured into your family's life. That can pay off the house, it can pay off the cars, it can pay for school tuition, it can cover expenses, it can be invested to create income for them. I would argue that if you're making $100,000 a year, $969,000 is not nearly enough, especially if you have children under the age of 18. I would say that that's almost not even close to enough. And here's the deal. So a lot of people say, okay, $54,000, all right, that's on 60, so I lose a little liquidity, but look at that. We have over 90% of the liquidity that we put into there. So that should be a very doable thing. When you look at the upside of the benefits and the value of that, it becomes kind of a no-brainer. Now you look at year two, you put in $10,000, and here's the deal. It grows by $9,928. So you really only lose $72 of liquidity of that money, and the death benefit is up to $986,000. So the death benefit increases with the increase here, and the cash value goes up as well. So you can, this is the deal. And so starting in year three, you can actually see you're contributing $10,000 here, and it actually grows by $10,515. So this is why I call it a savings account on steroids. And this is why, because of the fact that you saved inside of a whole life policy, you put yourself in a position where you can have liquidity of your money. You leverage that money to perform more than one function in your life. It's taking care of your savings account, i.e. emergency fund, and it's a self-completing plan. Think about that. I don't know about you, but to me, that's an extremely big deal, and that gives peace of mind. It allows you to show up differently in your life. It'll allow you to be a better investor, because having an emergency fund, now once that's built up and properly there, you can actually have your investments perform better for you in other areas of your life. All right, so now that you have that and you have a kind of a visualization of what that illustration could look like and how that money could get working for you, I think it's important to understand, okay, if we're gonna save our money, we need the emergency fund. It's gonna go into an account, and that's gonna be my emergency fund. It's gonna be self-completing, that's really important. So now what are the other things that we need? Well, I kind of alluded to it already, and it's talking about the cyclical nature of the market. When people are struggling, you wanna be put in a position to thrive. And so this is one of the reasons I tell people, not only do you need your emergency fund, you need your opportunity fund. You need to have a pile of safe, liquid, guaranteed, accessible capital that you can tap into in times where other people around you are struggling. Because when they are struggling, when their opportunity goes down because of poor financial structure, your opportunity will go up. This is why in 2009, more millionaires were made than ever before. This is why during COVID, when the crash happened, the recovery produced more millionaires than ever before that. And so this is the cycle of things. In times of hardship, while a lot of people struggle, the people that are actually prepared can catapult their wealth forward, and that's where opportunity comes from. And when you utilize a whole life insurance policy to protect your financial well-being, so to speak, from the angle of emergency fund, opportunity fund, self-completing plan, that's the foundation of it. Well, it becomes a no-brainer when you really think about it. Now, reason number 4 that I think everybody needs whole life insurance is because of the fact that, well, you need life insurance, right? And so most people that I know, it's very few people that I've ever met in my life that don't have a pure need or at least want of the benefits that life insurance brings to you. Whether you're an individual and you have a need for the estate benefits and the transitional benefits into the next generation for you through life insurance, or whether you just need life insurance to take care of your spouse and your kids and your family, and maybe you want to donate to your church, and maybe there's a community organization in your town or in your state that you want to provide a benefit to, that you want to pass something on to. What I've seen is that the want of life insurance, nobody needs life insurance while you're alive. So I'm not a big fan of people saying, well, how much life insurance do I need? You don't need life insurance. I don't need life insurance, but I'll tell you why I want life insurance. I want life insurance to be able to make sure that what I want to happen will happen when I want it to happen, whether I'm here to see it or not, like I said at the beginning for the self-completing plan. And when you look at the illustration that I just showed you a couple minutes ago, it's no wonder when we look at that and we go, okay, this is just leverage, right? If I can start putting money and transitioning savings that I'm putting inside of a savings account, inside of an opportunity fund, this is why we call it the and asset. It's not an either or conversation. We can have our savings account and it can be life insurance. We can have our opportunity fund and it can be life insurance. That opportunity fund can be used to invest in cryptocurrency, in real estate. That's why I wrote the book Cash Flow Hacking, guys, because this leveraging whole life insurance with a properly designed whole life, leveraging a properly designed whole life insurance policy with real estate is one of the most powerful vehicles that you can do in the world. And if you want to get a copy of this book, by the way, go down in the link in the description below. You can get a free copy. Just pay $8.95 for shipping and handling, or you can go to Amazon, pay $20 for it, and it'll get right out to you. But it is a phenomenal strategy. And once again, this just comes down to why do you want life insurance? Not why do you need it, why do you want it? That's the biggest deal. Now, I believe everybody needs it for your family, and if you are a business owner, if you're an entrepreneur, maybe you need it to protect your business. You need a key person policy. You need to make sure that your talents are insulated, that your business partners have the policies in place to make sure that the business is protected upon your demise, right? That is really your business, and your business partners are protected. I see way too many businesses that are out there where people are overly exposed to risk because a key person in the company is not insured, and other key partners will be up the creek without a paddle if something happens to any of the other partners, right? Because everybody plays these key roles. Just replacing key people can cost a lot of money, can cost a lot of time, and the opportunity cost when those go down, when those people have something tragic happen to them, can completely decimate businesses and completely ruin families. And so that's a big thing. Now, reason number 5 that I believe everybody should have whole life insurance is because I want you to control your medical directive. I've been telling this story a bunch in the past year or so. My father-in-law in November of 2020, November 4th, 2020, was diagnosed with stage 4 pancreatic cancer. I remember sitting in the room with him while the doctor gave him 3 months to live and basically told him that he had a 7.5 centimeter tumor on his pancreas that had spread to his liver. He had a blood clot in his leg that went from his ankle to his groin. They were doing a scan on that blood clot. They discovered the tumor in his lower abdomen at that time. And I just remember the look on his face, and I remember the look on my wife's face. It's her father, my mother-in-law, and seeing that and realizing like the doctors and traditional medicine said he was not going to live. He was not going to make it 90 days. Not only was he not going to make it 90 days, they basically said, don't do chemo, don't do radiation. We weren't going to do that anyway. I've seen too many people just waste away with pancreatic cancer because the level of radiation and chemo they need to give you to beat the cancer, because it's such an aggressive cancer, actually kills your body before it kills the cancer. And so the hard part was we kind of knew that that wasn't really an option, but they were like, even if you want it and were willing to fight, this is just not going to work for you. Best case scenario, you're going to live a year. If you just like ride it out, but chances are you got 2 months left of good life, and then it's going to be downhill from there based on the size and the growth and everything of this tumor. And so I just remember him looking across and like being done, and just saying, okay, that's it. My time is up. He's 75 years old, and that was it. And so being able to control your medical directive allowed him to be able to go and seek alternative treatments, do things with other doctors in other countries, and be able to travel and order supplements from other organizations, be able to do medical treatments that insurance doesn't cover, right? When you have a properly designed whole life insurance policy, or pretty much any life insurance policy, whole permanent life insurance policy, I should say, doesn't work on all term insurance. So this is the power of permanent insurance, is that it gives you access to your death benefit while you are living to use in whatever way you want. And my biggest belief in how one of the best ways that this can be used is to protect you in this situation so you can control your medical directive. If you are somebody who believes in alternative medicine, you have control of that. Now, just give you the good news, my father-in-law, at the day I'm filming this, it's at the first day of August here. So it's been almost 2 years now, and my father-in-law is still alive and kicking. He's doing actually better now than he was back then. He's healthier. We have him on special diets, special supplements, special treatment regimens. He's doing a lot of things. He's been dealing with a lot of specialists. It's cost a lot of money, but because he's able to control his medical directive, his oncologists and all the regular doctors are looking at him like he's some sort of miracle case, right? And it's amazing what you can do with your life if you are in control and if you are empowered. I believe that there's an element of when you believe that you're in control and you're not just having to follow some process that you don't necessarily believe in. I believe the body has an amazing ability to heal itself and to do a lot of powerful stuff. That's probably a whole different video and a whole different channel for that matter. But here's the bottom line. He was able to do it. He's alive today. He's still playing golf 4 times a week. He's super healthy, although he just had a foot surgery. That's another thing altogether. But here's the bottom line. He is still alive and cranking and crushing, and the doctors are now telling him that they don't even think he's gonna die of this thing because he's got the growth of the tumor so under control that he's like a miracle. It's nobody understands it. And so that's the phenomenal power of whole life insurance. When you have access to that capital to be able to use for whatever you want, it doesn't have to be death benefit. It can be a benefit to keep you alive. And so those are the 5 reasons that I think every single person should have whole life insurance. It's a self-completing plan. You need an emergency fund. So if you're gonna save that money somewhere, the best place to save it is inside of a whole life policy because it's gonna be leveraged. You need an opportunity fund for the same reasons. Let's face it, you need life insurance, right? Whether it's for your family or for your business. I don't know many people in this world that don't want life insurance and the benefits that life insurance provides. And then finally, to round out the top 5, is the fact that you can control your medical directive and be really empowered to do so. And to me, when you add those 5 things together, here's what I'll tell you. There's not an asset on the face of the earth that will beat what a properly designed whole life insurance can do for you. And when people ask me, Chris, is life insurance a good investment? I say, no, life insurance is not an investment at all, but it's probably the most powerful foundational asset that every single person should have as a cornerstone foundational component of their financial strategy. So that's it. I hope it makes sense. If you have any questions, comment in the comment section below. I'll do my best to engage with every single comment. If you haven't already, make sure you subscribe, hit the bell that we get notified every time I launch a new video. Until next video, have a blessed, inspirational day. We'll talk soon. See ya.